How much Bitcoin do you need to retire? In this video, I want to go into this topic in depth, and I want to explain to you exactly how much Bitcoin you're going to need, how much money you're going to have to put away towards Bitcoin, or how much Bitcoin you can hold in order to retire in certain cities around the world. Let's get started. The first thing that I want to talk about is the Bitcoin supply, and people like to call it the inflation rate, but this would be the unlocking rate in my opinion. So the supply is going to max out at 21 million Bitcoin. This is going to happen in 2140, not 2041. 2041, there's going to be something close to that, but in 2140, there's going to be 21 million Bitcoin in total. How Bitcoin is produced is every single time there's a block created on the Bitcoin network, on the Bitcoin blockchain, there's a certain amount of Bitcoin that goes to the people who are creating that block. So these creators are called miners. They get a certain amount of Bitcoin as a subsidy. So this is the fixed amount of Bitcoin that you get no matter what for every block that you create. And then you also get transaction fees. So right now, the amount of Bitcoin that miners get as a subsidy is 3.125 Bitcoin. They also get fees for every single transaction that they confirm and add to the blockchain. And these fees are completely based on supply and demand. So the more people who want to have their transactions confirmed on the Bitcoin blockchain, the higher these fees go. Right now, the amount of unconfirmed transactions seems to be pretty low. So the fees are very, very low. 40 cents per transaction. Some people are paying a lot less than that. Even it's 1 sat per VByte, so 19 cents per transaction. Over time, Bitcoin has returned significantly more than gold and the S&P 500. This website is called Case Bitcoin. What we can see here is the return on investment based on a 1 year, 2 year, 3 year, 4 year, 5 year, and etc. So we can see here in the last year, Bitcoin has returned 116%. In the last 2 years, it's returned 470%, 4 years, 190%, and so on. If we look at the compound annual growth rate of Bitcoin, we can see 1 year is 116%, 3 years is 26%, 5 years is 67%. We can go all the way back to 14 years, which is 147%. Keep in mind that each Bitcoin can be split into 100 million units called Satoshis. So we can see that here, 1 Bitcoin is 100 million Satoshis, 0.01 Bitcoin is a million Satoshis, this number is 100 Satoshis, and this number is 1 Satoshi. Over time, Bitcoin's price has just gone up because it has a limited supply. More and more people are figuring out that there's only going to ever be 21 million Bitcoin, so they're putting their money into Bitcoin. They're transferring their value from the legacy financial system into Bitcoin. So we can see here, February 2010, 1 Bitcoin was a cent, so you could buy 100 Bitcoin per dollar. In July 2010, 1 Bitcoin was 10 cents, so you could buy 10 Bitcoin per dollar. February 2011, 1 Bitcoin was $1, so you could buy obviously 1 Bitcoin for $1, so 100 million Satoshis. June 2011, 1 Bitcoin was $10, so you could buy 10 million Satoshis, and so on. So we can see here, December 2024, at one point, Bitcoin was at 103,000, 108,000. Today, Bitcoin is at $93,000. At $103,000, you could buy 971 Satoshis per dollar. Today, you can buy something like 950, 925 Satoshis per dollar. This spreadsheet here is the Bitcoin supply schedule, so this will give you a little bit more context on what I'm talking about here. So we can see here each epoch, this is the column A, I'll zoom in. Column A is the epoch, so each epoch is about 4 years. The first epoch was from January 3rd, 2009 to November 28th, 2012. The block number, we can see that here. The first epoch was from block 0 to block 209,999. In that first epoch, 50 Bitcoin were created every 10 minutes. In the second epoch, which was from November 28th, 2012 to July 9th, 2016, block number 210,000 to 419,999, 25 Bitcoin were created every 10 minutes. In the following epoch, 12.5, in the following epoch, 6.25, and over time this has been decreasing. Right now, there are 3.125 Bitcoin being produced every 10 minutes. A really interesting trend that I like to look at is the amount of Bitcoin being produced every minute. So in the first epoch, there were 5 Bitcoin produced every minute. In the second epoch, 2.5 Bitcoin. Third epoch, 1.25 Bitcoin every minute. Fourth epoch, there were 0.625 Bitcoin produced every minute. And today, there are 0.3125 Bitcoin being produced every minute. So over time, this number has dropped significantly. It takes more time to produce every Bitcoin. So over time, what we're seeing is that the amount of money that people are willing to pay for Bitcoin has increased because it takes more resources to produce one Bitcoin. We can see from this that there are some trends here. In 2032, there's going to be less than one Bitcoin being produced every 10 minutes. In 2044, there's going to be less than 0.1 Bitcoin being produced every 10 minutes. So less than 10 million Satoshis. In 2060, there's going to be less than 1 million Satoshis being produced every 10 minutes, and so on until there's no more Bitcoin being produced. The way that I see it, the majority of adoption will happen over the next few years. I don't think it's going to take until 2140 for everybody to start adopting Bitcoin because people are going to figure it out before then. I think the majority of adoption is going to happen between these two epochs here. So between epoch 7 and epoch 8. So between 2032 and 2040. So if your goal is to retire in 10 years, you would be retiring in between these two epochs. So you'd be retiring in epoch number 7. Right now, 94% of the Bitcoin has been mined out of the 21 million, and it's already in circulating supply. So every single Bitcoin is owned by someone. The reason why the price keeps going up like this is because the people who own Bitcoin don't want to sell at the current prices. So as the number of people who are willing to sell Bitcoin at the current prices run out, the price goes up. Over time, we are going to see a lot of volatility. We may see Bitcoin drop to 70,000, then go all the way up to 150,000, see it drop back down to 100,000, then go to 200, 300,000, then it drops back down to 150,000. We're going to see those movements in price, but over time, Bitcoin's price seems to just go straight up because there's a limited supply and basically unlimited demand. So if we go based on the knowledge that there are 21 million Bitcoin, a total of 100 million Satoshis per Bitcoin, the lost Bitcoin estimate from River is 1.57 million Bitcoin. The total circulating supply right now is 19.8 million Bitcoin. And in 2035, by the time that you may want to retire based on what you hear in this video, there will be 20.75 million Bitcoin in total. So the current global population is 8 billion. The estimated global population in 2050 is 9.7 billion. So over time, the population will continue to grow. This is just an estimate. Nobody really knows. This is just an estimate, of course, just based on what numbers have been in the past. So over time, more and more people will demand Bitcoin. So let's take a look at some of the numbers here. In 2025, if we have 100% adoption based on the 19.8 million total supply, each person on Earth can have 247,500 Satoshis. So this is 0.002475 Bitcoin. At 75% adoption, 330,000 Satoshis per person. At 50% adoption, 495,000 Satoshis per person. At 25% adoption, 990,000 Satoshis per person. If we consider the lost coins, we could have 227,000 Satoshis per person at 100% adoption with the current population numbers. 75% adoption, 304,000 Satoshis per person. 50% adoption, 455,000 Satoshis per person. And 25% adoption, so if 25% of the people on Earth today adopted Bitcoin, they could have 911,500 Satoshis per person. The reason why I think that Bitcoin's price is going to continue to go up over time is because it's the best form of money we have based on these characteristics. Today we use the US dollar. The US dollar can be created out of thin air, and Bitcoin's price is based on the US dollar. Bitcoin is a finite asset, while the US dollar is an infinite asset. There's no limit to how many dollars can exist. The US government can borrow dollars into existence. Based on all of these characteristics, Bitcoin is the best form of money we have. Fungibility refers to your ability to exchange one unit of a currency for another. If they both have the exact same value, they are fungible. Portability means how quickly you can move it around the world. Bitcoin is the best for this. You can move Bitcoin and get final settlement within minutes. Durability is, of course, important because you want your money to last for a very long time. The US dollar is only durable because you can exchange your physical currency for other units of currency if your currency is destroyed. Gold is very high for durability because you can't destroy gold. Bitcoin is, I would say, very high, but it doesn't have a very long history. That's the only thing that holds it back in terms of durability. The next characteristic is divisibility. This is whether or not you can break down a unit of currency and then put it back together with minimal loss. So if you had diamonds, for example, diamonds aren't that great for divisibility because if you break a diamond into smaller pieces, you're not going to have the same amount of value in aggregate if you put those pieces back together. So if you have one 5 carat diamond and you break it down into 5 1 carat diamonds, you're going to have in aggregate a lot less value. Bitcoin is great for this because you can break down the amount of Bitcoin that you have and you can put it all back together very easily. Gold is not very easily divisible because it's very difficult to measure the weight of gold. It's also very difficult to break it apart unless you have specialized machinery, specialized equipment. The US dollar is not scarce. It can be created at will, as I mentioned before. Bitcoin is the best for scarcity because we know exactly how much Bitcoin will ever exist. Decentralization is also very important. Decentralization just means that there's no person in the middle that can be attacked. Nobody can be sued or arrested and stop the financial system. Depending on how you transact with the US dollar, it's either centralized or decentralized. If you have physical dollars, you can transact with them without having to refer to a third party in the middle. With gold, it's the same thing. If you have physical gold, you can transact. You can give that gold to someone else and nobody else has to know. On the other hand, if you have digital dollars, like you have a bank account, for example, you have to go through a bank. And without a bank, you can't transact. Same thing with gold. If you want to use, let's say, some kind of gold-backed token, you'd require a custodian to hold that gold for you. Bitcoin is really great for decentralization because everybody can hold their own Bitcoin, while on the other hand, with gold, that's not possible. The last characteristic here is salability. This is the ability for you to sell your currency or your asset for other goods and services. Bitcoin isn't very widely accepted yet, but eventually it will be. The last one here is tulips, because a lot of people like to compare Bitcoin to tulips. If we look at tulips in the same context as Bitcoin, gold, and US dollars, tulips do very, very badly in every single one of these characteristics except decentralization, because anyone can create tulips. And the last thing that I want to show you here before we go into the retirement calculator is the top assets by market cap. I think Bitcoin is going to continue to climb this rank. I think it's going to go to fifth, fourth, third. It's going to eventually be ahead of gold. It's going to be ahead of Apple. It's going to be ahead of everything. We can see here how many things that Bitcoin is already ahead of, how many assets. We can see here silver, Meta, Saudi Aramco. There's actually the S&P 500 here as well. Bitcoin is worth more than the S&P 500 Trust, the SPY. This is one of the biggest ETFs in the world. If you want to own Bitcoin, basically what you're going to have to do is you're going to have to take it away from these entities that own Bitcoin. We can see here 196,000 Bitcoin is owned by other entities. This includes bankruptcy estates and DeFi or smart contracts. Satoshi Nakamoto, the creator of Bitcoin, owns about 1 million Bitcoin. The lost estimate that I was telling you about, 1.57 million Bitcoin. Individuals own 15 million Bitcoin. Businesses own 811,000 Bitcoin. Funds and ETFs own about 1.25 million Bitcoin. Governments own 307,000 Bitcoin. And available to be mined over the next 115 years, it will be 1.21 million Bitcoin. And now that you have all of that context, let's look at the calculator to see how much money or how much Bitcoin you'll need to retire in the next 10 years in some of the biggest cities in the world. What I did here was really simple. I went to Peter Schiff's website. They have this great tool that shows you how much it costs to live in every city in the world, all of the major cities in the world. So let's take a look at that. You can see cost of living index. It shows you the general price level. It shows you the monthly expenses for a single person, shows you the monthly expenses for a family of 4. Safety, so how safe it is, whether or not there's crime there. Climate, we can see how comfortable it is to live in that area. And then the air plus water pollution. Generally, I would say to go to countries that have green for everything. If you can find something that's at a low price level with everything in the green, then you're doing pretty great. So I brought over all of the data for the top 50 cities that people may want to live in based on ChatGPT, and I did some calculations. This is the calculator that I used. I have it linked in the description below, so if you want to run the numbers yourself, you can do that as well. But what we can see here is the first thing is the year. The second thing is the annual expenses. These annual expenses increase every single year based on this expense inflation rate. So over time, this number increases by 3% per year. I think that 3% for the expense inflation rate is pretty reasonable. If you want, you can increase it more. You can change the number yourself. The investment portfolio is the amount of money that you would have if you contribute this number here, the investments, at this growth rate every single year. at this frequency. So in this case, we see here that you're investing $8,848 monthly, and over time, you're increasing your investments by 5% every single year. And that's what's accounted for on this column C here. Your withdrawals are based on this number here. So if we take 4% of 123,599, you'll be able to withdraw $4,943.98. So based on your expenses, your annual expenses, minus your withdrawal rate, you get the shortfall. So if you have a portfolio that's worth about $123,599, you'd be able to withdraw $4,943, and that would be not even close to enough to this $95,000 that you need to retire. So the shortfall here is the annual expenses minus the withdrawals. What I did on this spreadsheet was I used the data tab on Excel. I used the solver to solve for this number to make sure that at 10 years, your shortfall is 0. So I'll give you an example here. So if we go solver, I just entered these numbers here. I'll hit solve, and it gives me that number here. You can see here. So just to connect all those dots here, we can see $7,753 is the cost of living in New York for a single person. If you wanted to retire in New York, you'd have to put $8,848 into the stock market, stocks at 10% every single month, and that number will have to increase by 5% per year. And by 2035, you'll be able to cover all of your expenses. With Bitcoin, of course, the number is a little bit different. $7,753 in monthly expenses. Your investment has to be $2,731 per month. And over time, you're going to increase that by 5% per year. I've changed something for this part here. We can see here the withdrawal rate went from 4% for stocks, to 7% for Bitcoin with a 20% growth rate. Keep in mind that you can go lower or you can go higher, depending on what you're comfortable with. Some years you're not going to be able to withdraw 7%. Other years you may be able to withdraw way more. So it's completely up to you how you want to do this. Based on a 20% growth rate per year, Bitcoin's price in 10 years will be $575,000. Now, if we go to the spreadsheet with the 30% growth rate for Bitcoin, you have a 9% withdrawal. You invest $1,079 per month. You'll be able to withdraw your annual expenses every single year. And you'll continue to have your portfolio maintained over time or increase in value. By this time, Bitcoin will be worth $1,282,000. Now, keep in mind that all of these numbers are just estimates, and you don't want to just go based on this blindly. You want to do your own research as well. So in 10 years, Bitcoin will be worth $1.282 million. If you have a 9% withdrawal rate, you'll be able to invest $1,079 and retire by 2035. If Bitcoin grows at 40%, again, this is numbers for New York, 40% growth rate. If you have an 11% withdrawal rate, so you're withdrawing 11% of your portfolio, you have a 5% cost of living raise, and Bitcoin's price is at $2.7 million, you'll have to invest $427 per month. So these are the numbers for New York. You can see here, stocks, you're investing $8,848 per month. Your portfolio is worth $3.125 million by the time you retire. If you invest in Bitcoin at a 20% growth rate, your portfolio is going to be worth $1.786 million. You're investing $2,731 per month. The number of Bitcoin that you'll have by then, this is an estimate as well, it'll be 3.1 Bitcoin. So if you have 3.1 Bitcoin today, you'll be able to retire in New York if you don't put anything else away in 10 years. If Bitcoin grows at 30%, you're putting away $1,079.16. Your portfolio will be worth $1.389 million, and you'll have 1.08 Bitcoin. If Bitcoin grows at 40%, your monthly investment will be $427. Your portfolio will be worth in 10 years $1.136 million. And the number of Bitcoin that you'll need to have to retire, so if you want to retire today, you'll have to have about 0.42 Bitcoin. You can go with 0.5, 0.6. For this one, you can go with 1.2, 1.3, whatever you're comfortable with if you want to get a little bit of a bump. That way, if Bitcoin's returns are lower, you're better off. If you have 3 Bitcoin already, maybe you want to continue to stack more, and you'll have 4 by the time you retire, and you'll be able to retire a little bit sooner. If you want to retire in Zurich, this is a great city. All of them are high. We consider the safest, comfortable, and very clean. New York, on the other hand, was average for safety and average for air and water pollution. So in Zurich, your expenses are $6,836 per month. For a family of four, it'd be $13,805. Keep in mind that these numbers are only applicable to the single. So you can see here, with stocks, you'd need to invest $7,800 per month. You'd have to have a portfolio value of $2,756,000 to retire in Zurich. And again, your portfolio will continue to have to grow at 10% per year. With Bitcoin, you can invest $2,408 per month. Portfolio value will be $1.574 million. You'll have about 2.73 Bitcoin. So you can, if you save 2.73 Bitcoin today and you keep stacking, you may be able to retire earlier. Bitcoin 30%, $951 per month. Your total portfolio value in 10 years will be $1.224 million. And the number of Bitcoin you'll have is just under one. So if you have just under one Bitcoin today, keep stacking if you want to, but in 10 years, you should be able to retire if Bitcoin returns 30% per year. Now, the 40% monthly investment is $376, just a little bit higher than $1 million for your portfolio, and you have to have 0.37 Bitcoin. Singapore is another city that a lot of people want to retire in. Very expensive. It is very safe. Climate is average, and air and water pollution are very clean. With stocks, you need to invest $7,251 per month. You have to have a portfolio value of $2.5 million. With Bitcoin at 20%, you have to invest $2,238 per month. Portfolio value will be $1.463 million. And the number of Bitcoin that you'll have if Bitcoin grows at 20% per year is about 2.54 Bitcoin. So if you have 2.54 Bitcoin today, you can retire in Singapore in 10 years. At 30% for Bitcoin, $884 per month, portfolio value $1.138 million. And the number of Bitcoin that you have to have is just under one again. At 40%, you can invest $350 per month. Your portfolio will be worth about $931,000. And the number of Bitcoin that you have to have is about 0.35. Geneva, very expensive, very safe, comfortable, and very clean. Stocks, you invest $7,082 per month. Portfolio value has to be $2.5 million. With Bitcoin at 20%, your monthly investment will be $2,186 per month. Your portfolio value will be $1.4 million in 10 years. And the number of Bitcoin that you'll have is about 2.48. BTC at 30%, $863 monthly investment, $1.12 million portfolio. You'll have to have 0.87 Bitcoin. Bitcoin at 40%, last one here, $342 per month is your investment, $909,000 portfolio, and the number of Bitcoin that you'll have to retire is 0.34. So again, keep in mind that you can have this amount of Bitcoin today and you don't have to do anything else. Now, keep in mind that I could be wrong, but if Bitcoin goes at these levels, then you'll be able to retire in 10 years in those countries. We can see here the next one, Sydney, Australia. You have to invest $5,500 per month in stocks, $1,700 per month in Bitcoin at 20%, $700 per month in Bitcoin at 30%, and about $270 per month into Bitcoin at 40%. For Toronto, you can see here, if you want to invest in stocks, you have to invest about $5,000 per month. If you want to invest in Bitcoin at 20% growth, $1,500 per month. If you want to invest in Bitcoin at 30% growth, $608 per month, and Bitcoin at 40%, $241 per month. Munich, another great city. I think this is the first one that's not as expensive out of all the ones that I've gone through so far. If you want to invest in stocks, you have to invest about $4,700 per month. Bitcoin at 20%, you have to invest about $1,500 per month. With Bitcoin at 30%, you have to invest about $574 per month. With Bitcoin at 40%, you have to invest about $227 per month. Madrid, Spain, another great one. A lot of people like this city. Very warm, pretty safe, and it's not too bad for all of these characteristics. For stocks, you have to invest $3,800 per month. With Bitcoin at 20% growth rate, you have to invest about $1,200 per month. With Bitcoin at 30% growth rate, you have to invest about $470 per month. And with Bitcoin at 40% growth rate, you have to invest about $186 per month. And I'll do two more here, Lisbon and Tokyo. We can see here Lisbon, it's very safe, very comfortable, very clean, moderate, 4 out of 7 for the general price level. Stocks, you have to invest about $3,800 per month. Bitcoin at 20%, you have to invest about $1,100 per month. Bitcoin at 30%, you have to invest about $470 per month. Bitcoin at 40%, you have to invest about $200 per month. You'll have to have only 0.18 Bitcoin to retire, which is not too bad. It's 18 million Satoshis. With Bitcoin at 30%, you have to have about 47 million Satoshis. With Bitcoin at 20%, you have to have about 1.33 Bitcoin, so 133 million Satoshis. If you have stocks, again, you have to have $1.346 million, while with Bitcoin at 20%, you have to have about half. And now the last city, we see Tokyo here. Moderate for price levels, safe, comfortable, and clean. Stocks, 10%, you have to invest about $3,500 per month. Bitcoin at 20%, you have to invest about $1,070 per month. Bitcoin at 30%, you have to invest about $423 per month. And Bitcoin at 40%, you have to invest about $168 per month. And I have a list of all of the cities here. You can see all of the same numbers. Stocks with a 10% return, Bitcoin with a 20%, Bitcoin with 30%, and Bitcoin with a 40% return. You can see all of them down below. Just refer to that spreadsheet. If there are any cities that you want to see a breakdown for and you don't see it on this spreadsheet, just let me know in the comments below and maybe I'll make a second video.